Thursday, May 12th, 2022, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how, unfortunately, inflation will only get worse in Britain going forward, not just in 2022, but probably for the next decade or so. I'm going to look at history today. I know a lot of you like it when I reference history because history gives us an indication of what could happen in the future. It doesn't coincide exactly, but it rhymes, as the old saying goes. I'm going to look at Harold Wilson today and inflation. And then I'm going to look at the markets, and I'm going to talk a little bit about what's going on and what I think could happen in terms of the Fed and the probability that it might pivot, as some people are calling it, which means switch their hawkish stance to a dovish stance. And of course, we're going to look at the markets towards the end of the report. So I want to play you a clip. It's a short clip of Prime Minister Harold Wilson. And this was back in November 19th, 1967, when the pound was devalued. And back then it was a big thing because we are under a sound money system where the dollar was fixed to gold at $35 an ounce, and the pound was fixed to the dollar, so indirectly linked to gold. But the UK was inflating the system too much, and it couldn't keep that peg. So they devalued, which was a pretty serious thing back then. So yeah, in 1967, the UK government of Harold Wilson devalued the pound from $2.80 to $2.40. So a devaluation of 14%. And is it any wonder that we had the inflation in the 70s? Well, this was like the trigger for it, I would say. But now let's listen to what Harold Wilson said on that fateful November day back in 1967.
From now on, the pound abroad is worth 14% or so less in terms of other currencies. That doesn't mean, of course, that the pound here in Britain, in your pocket or purse or in your bank, has been devalued.
So there you go. The pound in your pocket hasn't been devalued, even though it has. And why is that? Well, because everything is priced in dollars. At least it was back then. Today, I guess the ruble is trying to break that monopoly. And we need to buy a lot of things. A lot of things are priced in dollars. So the pound in your pocket will still be like a pound coin, but he didn't tell you that the purchasing power really would go down the drain. So another politician being dishonest, I would say, because I'm sure he had at the time economic advisors that knew what was going on. But again, keeping the public in the dark. And this is the reason that I do these videos, to try to help the public, not just here in the UK, but everywhere around the world. This is not just a British disease, inflation. It's a worldwide disease, so it applies to any country. So why am I talking about this? Well, because the British pound has been melting down of late in the last few weeks, and I've looked at it. And we are almost to the 14% level of devaluation that we had in 67. And look what happened in the late 60s, 70s, up until the early 80s, even mid 80s. We had over a decade of continued inflation. And what people need to understand, and I've said this many times, and hopefully if you're watching this the first time, I'm glad, because inflation is not prices rising. Inflation is when the government and the central bank allow the credit and the supply of money to grow faster than the economy can grow. So you've got too much currency I don't like to call it money because we don't really have money. We have currency chasing too few goods. And that's what you get. You get a general rise in the price level. And I want to quote again Felix Sommery, the Raven of Zurich. He was a very influential banker in the first half of the 20th century. He advised empires, he advised the United States Treasury. He was up there in terms of knowing what he was talking about. And this is what he said. The state alone is responsible for inflation. Inflation without government or indeed against government is impossible. So maybe President Biden should read The Raven of Zurich. It's a good book, President Biden, but I'm not sure you've got the faculty to read a full book and understand it right now. Maybe you did 20, 30 years ago. But anyway, so I've gone through some numbers about on the pound, of course. And as of 8 a.m. this morning, and I took a time because things change and someone might say, oh, you said this happened. So the British pound versus the dollar is year to date down 9.76%. So almost 10%. I guess 10% if you round it up. But more importantly, versus gold. And back then in 67, basically that devaluation was versus gold because the dollar was supposedly as good as gold. So versus gold this year, the pound is down 12.24%. So yes, the gold market and precious metals markets feel negative. The sentiment feels bad, but it's actually doing what it's supposed to do in times of mayhem that we're having. So we've almost got 14% devaluation, and I think it's only a matter of time that we get even more than 14%. And of course, this devaluation is not like an event because we don't have the fixed rate exchange regime that we had up until 1973, actually. Right now, currencies just float, which is a really bad thing. It's like having a ruler change every day and the inch change in length every day. It's like having weights change every day. So no one knows exactly what's going on. And that's our world, our monetary world. It's a crazy world that hopefully will go back to sanity of real fixed value. And that's just, that's gold and silver. It's just a weight. And they've been stores of wealth for thousands of years. So why are prices going to rise even more? So right now, for example, in the latest data that we've had, the CPI in the UK rose by 7%, but I like to use the RPI, which actually takes into account rents and council tax. That rose by 9%. The last reporting of that number. Next week on Wednesday, we're going to have the April numbers come out. There's no expectations, but I expect RPI to get up to 15, maybe even 20% before the end of the year. And I don't think it's going to be, it might peak and come down in the next few years, but it's still going to be very high and could go up even more in the next decade, just like we saw back in the late 60s and throughout the 70s and early 80s. And again, it's because most people think prices go up. No, in the inflation, the currency goes down. So it looks like the price goes up. And a lot of people don't understand that. It's just over issuance of the currency. It's like putting water in the milk and putting more and more water in the milk, pretty soon you're going to be drinking water. There's no milk. And that's what they do to the currency. Pretty soon you're not going to be buying anything. And I also decided to have a look at the COMD, which is the commodity ETF that I follow. And that's in dollars. It's the Invesco Bloomberg Commodity ETF. And as I said, it's priced in dollars, and that's up 26.43% year to date. So if you add the devaluation of the pound versus the dollar so far this year, that commodity index is up 36.19% versus our currency. So that means that everything, generally speaking, in terms of commodities and real things, is gone up by more than 1/3. So that's why I'm talking about 15% RPI and maybe even 15% CPI. They call that inflation, but that's rising prices, the consequence of inflation, right? The creation of all the money and credit. And yes, how do you protect yourself? Well, I've been telling people for years, and this is not advice, it's just what I think. And a lot of people have done their homework and have taken action. Put some of your currency savings or sterling or Bank of England note savings, whatever you want to call it. Yeah, buy some gold with it. It will protect yourself. After all, gold has been the best performing money or currency this year. It has even outperformed the dollar because sterling is down 12.24% versus gold, and it's down only 9.76% versus the dollar. Yes, I'm not trying to be like a Cassandra. I'm just trying to warn you about what's going on. I think all the other headlines, stories, politics, geopolitics, war, Brexit. Now they're talking about the Northern Ireland thing. These are just distractions. Talk about Keir Starmer, that he's going to resign if he's fined and has to pay a fine. I mean, just focus on the fact that just keep an eye on the sterling exchange rate, GBP, USD, and keep an eye on XAU, GBP, and you will know that things are unfortunately going to get worse in terms of purchasing power. What about for people who have debt and can service it? Yeah, that will be a good thing because you're going to be able to pay off debt, and the debt becomes worth less because the currency is the flip side of the debt. But if you lose your job, that or if your wages don't keep up with the inflation, it will be tough servicing the debt. And what about house prices? Yes, house prices in sterling might be going up, but in real terms, in terms of the dollar, which is still the major reserve currency, and gold, it's actually going down if you look at these numbers. So don't be fooled into speculating in housing. Don't be fooled into thinking I'm getting wealthier as well, because the currency in which house values are denominated in this country is going down the drain. So before we look at the Fed and the markets, just look at some key levels in the pound. Technically, I think today we broke 122. I think 120 will be a psychological level, but the key level really is around 114. That was the low in 2020, March 2020, when the Fed came out and helped the Bank of England. They opened the swap line, which meant it gave the Bank of England access to dollars so they could sell those dollars and buy the pound. And that's why the pound bounced in March 2020. And after that 114 level, you have to go back to the early 80s. I think the pound actually touched like $1.035 or 1.05. So I think unfortunately that's where we're headed. unless, of course, and we now move over to the Fed, unless they pivot and even though they're talking about they're going to raise rates 50 basis points in the next two meetings and probably more, they're going to unwind the balance sheet or QT. And they were saying the same thing back in 2018, 2019, and even towards 2020. But then you had COVID, right? And that was a great cover because people like me and others who follow the markets closely, who have worked in finance in the city or on Wall Street, we were seeing that there was a major crisis in the financial system that started in September 2019. That was the repo crisis, when repo rates went up to 10%. And the repo is just a rate at which financial institutions lend to each other overnight. And why did it go to 10%? Well, because financial institutions, the big banks, were in trouble and they didn't trust each other. And even though the Fed funds rate was at 2, that repo rate went up to 10. But COVID was a perfect excuse to start to throw everything at it again, to do more QE, to cut rates to 0. So what I'm saying here, I think they could pivot and they will find a cover, a crisis. What that is, I don't know. So when you hear of something big, a big crisis, compare that, you could maybe compare it to COVID. That could be the time when they pivot. I'm not saying it will be. And then maybe the pound will be saved again, but we'll have to wait and see. And even if it's saved again, we're still going to get inflation going forward. So yes, the pound in your pocket, the pound coin is still the same, but it's buying a lot less. Don't believe in what Prime Minister Harold Wilson said. As usual, politicians always trying to fool the public. So with that, let's look at where the markets are this morning then. It's 8:26 a.m. London time. So we've got spot gold at 1848, is down about $4. Range has been 1844 to 1859. Silver, yes, coming off here. I'm very comfortable with having physical gold and silver, despite all this sell-off in silver that we've seen in the last few weeks. Silver is down 28 cents. It's at 21.27, down over 1.3%. The Dow future is down 150 or 0.5%. The Nasdaq 100 is down 0.75%, and the S&P is down 0.5%. The FTSE is down over 2% at 7180, so the FTSE getting hit hard. The Euro Stoxx 50 is down 2.3%. And before I look at the currencies, just talk a little bit about cryptocurrencies and Bitcoin. Bitcoin actually got down to 25,700 overnight. So I think we could very easily go down to around 20,000. That's a key support. The break of 29,000 was very important. We've seen that there's a stable coin called, I think, Terra or Luna. I forgot the name. Stable coin is supposed to be as good as the dollar, 1-to-1, and that broke the buck, so to speak, and I think it went down to 28 cents. So yes, cryptocurrencies are proving to be not a very good store of value, not a very good safe haven, as some thought in times of monetary mayhem. I think the important thing to look at now is a stable coin called Tether or USDT. That's the biggest, that's the granddaddy of the stable coins. And I've been talking about this for over 2 years, that Tether is supposed to be 1-to-1 to the dollar. For every tether, there should be $1, but it's not. And right now, Tether's breaking the buck. It's at 0.986. So if Tether continues to go down, keep an eye on that. We could see a major trouble in cryptocurrencies. And cryptocurrencies got up to, in total, a market cap of over a trillion. That could create trouble elsewhere in the financial system. It's big enough. So yeah, keep an eye on Tether. It looks like it's not doing well here. It's trading below 99. And a lot of people think there's only 3% backing. So Tether is like the Federal Reserve for cryptocurrencies. And if Tether's in trouble, all cryptocurrencies are in trouble. Does that mean that the concept of Bitcoin is a bad thing? No, it just means that the market has become so speculative that you need to be careful. So let's look at the currencies now. Yeah, sterling is down 0.5%, breaking 122 or 121.90. The euro as well is breaking 105. It's down 0.5% at 104.62. The dollar is actually down 0.75% versus the yen at 129.01. The dollar is up slightly versus the Swiss franc at 99.56, and the dollar is up versus the yuan 0.2% at 6.80. Yeah, and I think the foreign exchange market is very important. If that market is all over the place and the dollar is very strong versus these fiat currency, it's a sign of trouble. So Aussie dollar is down 0.75%, 68.85. The dollar is up 0.25% versus the Canadian dollar at 130.26, and the Kiwi dollar is down about 0.75% at 62.44. General commodities, WTI crude is down 2% at 102.18. Brent crude is down 1.7% at 104.80. And US nat gas is down 1.5% at 7.56. High grade copper is down 3% at 4.08. So yeah, a lot of volatility, and the Fed in commodities, and the Fed said that could be a trouble for major financial institutions because with the repeal of Glass-Steagall, commercial banks were allowed to do investment banking business and speculate in commodities. I think that was a very bad idea. You can thank President Clinton and Robert Rubin and Larry Summers, a good friend of Jeffrey Epstein, for that. So let's finish off and look at the 10-year yield, see what that is. And yeah, that's dropped massively. We were at 320 beginning of the week. We're now at 284. It's down 7 basis points overnight. I guess that's telling us that bond investors are worried about the economy. I'm not sure if they're right in terms of inflation expectations. So I expect bond markets to remain volatile. And by that, I mean, we could see that go back up to 3% like today. So it's going to be all over the place. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.